Happy Friday, everybody. Welcome back to Swan Signal Live. I'm back here in the host chair along with John Har, my co-host. Jason and Matt from the Swan Private team are here with us today as well. Thanks, John, for holding down the fort again last week, twice in about 6 weeks. And I appreciate you guys making some space for me to get out into nature. It's been great.
It's summertime, Brady. You're like a central banker. You barely work in August.
Yeah, right. Anyway, it's been fantastic. I spent 5 days in the boundary waters of northern Minnesota with our friend Brandon Quidham. And just for a little proof, we did bring steaks into the boundary waters. Most of those campers bring those plastic bags of food, but not us. We bring the cast iron and the steaks.
Got the ribeyes.
Whether or not we have to carry that heavy stuff over portages between lakes, it doesn't matter. It's all worth it when you sit down, forage for some mushrooms, and have mushrooms and steak with Brandon in the backwater. So good times. Thanks again, guys.
The stainless steel maxis are very upset right now.
They are. Look, in the backcountry, I don't think anything beats a stainless steel except for, a cast iron, just for like the ambiance and the vibe, Cast iron on top of an open fire. That's it. Even though the stainless steel is quite, lighter, there's definitely an argument to be made there, but yeah, it just doesn't feel right.
John Hart, are you a stainless guy? Or are you cast iron? Or a little both?
I mean, in like an apartment indoors, I'm probably more of a stainless steel guy. But yeah, if you're going for a little more rugged environment, I think I would go cast iron. I have nothing against cast iron. I've just never had a lot of exposure to it. So I kind of stay out of the debate, cast iron, stainless steel, core versus knots. I kind of just watch those debates from afar.
Right.
I will say cast iron for me is so much easier to clean, and maybe I'm just doing it wrong with stainless steel, but yeah, a well-seasoned cast iron is just much easier for me to clean.
It's true. It is true. And you have stainless steel is a little temperamental. You got to maintain that nice temperature zone. It's a pretty narrow temperature zone to get the non-stick sort of effect, and also not burn the oil and mess up your pan. So anyway, I use both, and I don't really care, except if I am outside camping, I definitely want that cast iron. All right, guys, good stuff. I was out of it. I was off grid all week, so I had to download what happened in Bitcoin this morning, and catch up with everything you guys were posting in the Slack channel. So I might lean a little bit on John to help out today as well. But we'll start out with some data on 30-year yields. And we've got, here's Robin Brooks talking about the 30-year yield rising everywhere, even though the world's central banks are in an easing cycle. So it's the best indication, he says, that rising long yields are due to a global debt glut. The answer to which is to get lax fiscal policy under control, not to lean on your central bank. So we'll transition this straight into what's happening with our central bank. But John, any more general trends to draw from this data? Here, take a closer look at the data, a little bit more readable.
Yeah, it's a good chart. And Robin Brooks, interesting macro thinker. There are tweets like this of his that I will find valuable. If anyone spends enough time on Bitcoin Twitter and has been in this world for enough time, you know that Robin Brooks is also a huge Bitcoin hater. And he has said a lot of things about Bitcoin about, oh, look, it's, just speculation. It's only correlated with interest rates or something like that. And he had a lot of victory laps in 2022. And then he kind of gets quiet on it more so now. I actually did respond to that tweet of his. And I tried to politely say, given this thesis, do you have a view on Bitcoin or something like that? He did not respond. Not expecting him to, but he is just making an interesting point, which is that rates are rising. Some of these yields are like the highest they've been in over a decade, 30-year yields, if a particular country you're looking at. But then at the same time, as his tweet said, central banks are looking to cut rates, and he talked about getting the fiscal spending in order, which most people agree with conceptually, but okay, what if they're not going to get the fiscal spending in order because it's not politically, socially, economically palatable? Then they are going to lean on the central bank. So that's exactly what we're seeing happening there. it's funny to get what I think is like the Bitcoin thesis confirmed from a guy who hates Bitcoin, but I think that's what we're seeing right there. So that's on that chart. Maybe I'll just chat a little bit about the Fed and stuff, because we did have an employment report today, Brady, if you want to go there next. I don't even know if we have a graphic for it, but basically,
I don't think we do.
Okay, cool. This morning there was weakening jobs data. So you get monthly changes in US jobs. It was a pretty small positive number. The expectation range was higher than where it came in. So lower than expectations. That usually signals, okay, the employment labor market is not as strong as people had thought. These monthly releases can be a little bit noisy. There is also a bunch of assumptions built into them, which is important. And it's unfortunate because by the way they put out this data, they make it seem like, oh, we just counted up all the jobs that got created this month, and here's the number. That's how it's portrayed. They don't really have an ability to do that in real time. So what they do is they actually do a bunch of assumptions in like different sectors of the economy. And that's why you see all these revisions after the fact. And the revisions can sometimes be massive. So keep that in mind. There's like a bunch of economic and economics people and statisticians making assumptions about what the numbers are. But either way, it looks like the labor market has been softening. The interpretation of that can be twofold. One is that we're probably going into a weaker economic environment, which is generally bad for investments and risk assets in general. But then, yeah, here you go. Perfect, Brady. So you see there was a June number that was revised to, it was slightly positive previously. It got revised down to be negative for jobs added in the month of June. And then in August, it was another pretty small number. So all in all, it says, okay, maybe the economy is weakening to some extent, but then it's more likely that the Fed will cut. And that is the other big piece of news this morning, at least, which is now market participants believe that we are going to get a cut in September. And there was actually, I saw another post that said market participants are thinking there's a good chance that we get 3 cuts this year. So more cuts are now being baked in based on this weakening data. That's probably the biggest update from this morning.
So the Fed is sort of in a corner here. I know the Fed's been pressured by Trump for months now, really, and kind of ramping that up as he went along. Now this data is yet another sort of factor corralling the Fed. So what's the latest thinking in the market about rate cuts? What are the chances, do you think?
It's very high for September. I'll pull it up now, but I think it's close to 100% for the September meeting,
Okay.
which is mid-September. It is, the meeting date is September 17th. That's 90%. So to be honest, I thought it would have been a little higher after the data today. But I mean, big picture, I think this does confirm a lot of the Bitcoin thesis, which is inflation by any metric you choose is above 2%. I always have to point out, even the 2% number is arbitrary, but sure, if we go with 2%, their own number, all of the inflation metrics are above that. And those are inflation metrics which don't take into account home prices, don't take into account stock prices and other things. But even those flawed and narrow inflation metrics are above their target, and they're still going to cut interest rates in many countries. So this kind of is the thesis that we've all thought would play out for quite a while in Bitcoin, but gold is reflecting it as well. Gold is at another all-time high because I think investors are realizing, however you want to phrase it, there's a million different ways you could phrase it. Nothing stops this train. Fiscal dominance, all roads lead to currency debasement. We are watching it play out in real time.
John, is it fair to say that with the upcoming rate cuts and people being very kind of bullish on that, there's rising inflation, like even worsening inflation expectations, and that's leading to these long duration bonds starting to sell off and like capital rotating back into gold? Is that kind of one angle to view this story from?
Yeah, I think people do have increasing inflation expectations over time, and then generally speaking, that means you're less likely to want to hold a 30-year bond that's going to pay you some fixed interest rate. Funny enough, though, just so I think you're correct in the long run. Although today, if you look at U.S. Treasury yields, they're kind of down like 10% across the curve. But I mean, that's more of like a short-term tactical thing. I think that's because they see weakening economic data and they see the Fed likely to cut. But that's, that's talking like half a day's worth of interest rate moves. I wouldn't read into that too much.
Sure.
Yeah. So that's what I would say about the job stuff. I'll just talking about gold a little bit. I just did want to highlight that gold has definitely outperformed bonds over many time frames, but gold has also outperformed the S&P 500, including dividends. I ran the numbers in TradingView, and I'll just be honest, I haven't fact checked it, but they have a little selection that you can do, including dividends on SPY. So assuming TradingView, which is a very reputable platform, I don't know why it would be incorrect, but assuming it's correct, the gold has outperformed the S&P 500 with dividends year to date, 1 year, 3 year, 7 year, 20 year, and 25 year time periods.
25 years.
Yeah, I mean the 25-year one is like, I think that was a big one because a lot of, well, with gold too, your starting point does matter a lot, because if you pick it like at the top of the S&P like market bubble in like around the year. Yeah, if you pick it then gold is obviously going to outperform a ton. But if you start it when like that bubble just burst, then the S&P will probably be better. So you can cherry pick the numbers, but the reason why I did that is like you can pick a lot of different time periods where gold has outperformed. But same thing applies with gold. If you pick when gold was really high in like 2011 or something like that, if you start it there, then the S&P has outperformed since then.
Yeah.
That's actually an interesting thought experiment with Bitcoin. I have thought as Bitcoin matures, I've always expected Bitcoin to behave more like gold. And if we do get, well, I'll turn this to you guys. If you can have an asset like gold, which has it has thousands of years of history, right? It literally was money for a very long period of time. And even that asset can have periods of like FOMO and euphoria, a la 2011 when gold went up a ton. And then it like has some periods where it doesn't do so well. Do you guys think that could happen with Bitcoin in the future? Not like next year or the year after, but do you see there kind of being like long-term cycles where you can rotate out of Bitcoin and then re-enter it? And I'm just asking about cycle theory, I guess. But what do you guys think gold has any implications for Bitcoin cycle theory going forward?
I don't know. It's kind of off the top of my head, but I think I've always thought that Bitcoin's price, like peaks and troughs, would start to diminish. I've talked a lot about how I think starting 4 or 5 years ago, as larger holders like corporations or countries or just whales, wealthy people, start seeing Bitcoin as a store of value, that will then see like a narrowing of the gap, right? Like you're not going to see the 80% difference in a 4-year period, that kind of thing. And that does seem to be kind of playing out right now. We haven't seen anything more than like a 30% drop, I think, in this period. And if you look at, the chart as a whole, like this past year and a half have been this very, like, you could just basically draw a diagonal line up the chart and it's hugged it super tightly relative to all the volatility in the past. So I do see it becoming less volatile, and I do see it becoming more of a kind of a steady up and down, which I guess is less volatile. So in that sense, I do think it would kind of take the place of gold, or kind of go that direction as a mature asset, an established asset. And I think we are seeing that happen. However, I think there's just still way more upside for Bitcoin. It's like It's like buying, if you got in gold thousands of years ago and you were holding this whole time, there's a lot more upside because the value of the gold goes up as the value of the marketplace in which it is traded gets larger, and the net value of that marketplace goes up. And so Bitcoin's kind of network value just keeps going up as more and more people use it and find it useful, etc. And so there's just way more available market for Bitcoin to address at this point than gold. But I do think, behaviorally speaking, that we will see kind of a narrowing of that volatility over time, and maybe Bitcoin will get boring. It'll just kind of be boring after a while. But it's fascinating watching gold though. The past few years, gold's making moves. So shout out to Peter Schiff. You were right. you were right. Finally, just
to kind of build on that, I think gold at this point is just viewed as a safe haven. And when you have trouble, when people smell trouble in the bond market, they start to rotate into gold, or when there's geopolitical tensions, they might start to do that. I think Bitcoin will start to take a similar role in that respect. And I think that coincides with its market cap continuing to grow and that volatility starting to tighten and continuing to decrease. Right now, I would say 99 out of 100 people view Bitcoin more aligned as a risk asset than a safe haven. We don't feel that way, of course, but I think most people perceive it that way. And as that perception starts to change, I could see it behaving more like gold, and I could see investors approach towards it starting to mirror that of gold's.
Yeah. Go ahead, Matt.
No, I agree. It seems like, what does the world look like 50 years from now? Is this kind of mind blowing? Like, I have no idea. Are we on a Bitcoin standard at that point? What does that look like? I think everything you guys have said is right on. It just seems like over time we are going to shift from risk on asset to Bitcoin being a risk off asset. It just makes sense. So I think it probably would track something similar to gold.
Yeah, it is just interesting to observe that gold was basically flat from like 2012 to 2020.
Yep.
And if gold is the most analogous asset for Bitcoin, could something like that happen in the future? Yeah. Number one, since I asked the question, I'm realizing I'm asking more like a hyper Bitcoinized future, where it's like everyone who wants Bitcoin already has it, and then it's much more normal and kind of has already been entrenched everywhere. So I'm not talking about anything in the next like 3, 4, 5 years. But then the other interesting thing that you have to mention is obviously mining of gold. Like, there are publicly traded gold miners that mined a shit ton of gold. It's like in 08, 09, 10, 11, 12. And that glut, I think, helped there be an 8-year bear market in gold, which obviously would not happen in Bitcoin. So the gold Bitcoin analogy obviously does break down at some points.
No, that's a really good point though. And it should be noted here that, I think gold mining companies will probably respond to this, price rally by going and finding more gold and digging out more gold in a faster rate, right? So just remember that gold is inflatable, unlike Bitcoin. So that can happen and has happened.
Where to next? Speaking of gold, since we're on the topic, this is just a quick hit. I don't think we even had it in the formal agenda, Brady, but Harvard, this was announced a few weeks ago, so you heard us cover it on the show. Harvard's endowment bought roughly like $100 million worth of Bitcoin.
Yeah.
They also now own $100 million worth of gold. And that was, I think it was the first time, according to this Kitco article, it said Harvard's endowment fund jumped into gold for the first time on record. So
how old is the endowment?
It's
probably like 100 years old or something. We could imagine.
Yeah, it's a great question. I would think it's old. Pretty close to like whenever Harvard was founded would be my guess. But 100 years or something maybe.
Very old. Yeah.
Yeah.
I think that would be, to me, that's a big signal, right? If they're buying Bitcoin and gold in this environment, to me, it's signaling, hey, we just don't really trust the dollar right now. And I think that feeling is spreading and seems to be accelerating.
Brady, I got to give you the ChatGPT answer to the Harvard endowment. It's phenomenal. Okay. It says it traces its origins back to 1638, just 2 years after the school was founded in 1636. But the reason that they say it officially started back then, or technically, is because there was a reverend who recently came over from England and left half of his estate and his library of 400 books to the college. And the gift, which
That's
was
the
worth
endowment.
that, yeah, they're saying this was the start of the endowment because it was a gift and it was worth 780 pounds at the time. It became the foundation of the endowment. But I think it became much more of like a professionally managed investment fund at some point, probably like 1800s or early 1900s.
Yeah, that sounds about right to me.
Yeah.
But this is a signal, right? I mean, these are the kinds of entities who have identified a Bitcoin and gold as a store of value, as an alternative to the dollar, as the dollar's store of value property just continues to fail. I mean, it's failed completely already, but people are increasingly realizing that, and not just people, but like asset allocators and people who are running and managing lots of money, and looking to store value. And it seems like dollar and fiat related instruments like stocks, etc., real estate, are being less and less trusted, or to the point where at least they're like, okay, we got to get some of this. We got to dip our toe into it. That's a big signal in my opinion.
In 1974, they established the Harvard Management Company, which was a separate entity to professionally manage the endowment.
Yeah.
I don't think that's a coincidence that it happened a little bit after 1971, when it was basically like, hey, now that the money's like truly broken and untethered, someone has to manage this pile of assets professionally. Otherwise, we have a melting ice cube of dollars here.
Yeah. So about 50 years old. It's another inflection point on the what WTF happened in 1971.com.
Yeah.
Like, let's take a look at when did college endowments become professionalized? It's probably like mid 70s. I bet there's a lot.
Probably. Yeah.
Yeah. Awesome. We do have Treasury buying more of their stocks back. Oh, we do want to get to that one. This is the one I meant to show, though. Just a quick hit here, kind of on the same topic. The Treasury's bought $2 billion of its own debt, totaling now just under $10 billion in the last 3 weeks. Jason, you threw this one in the chat. What do you think this means? What caught your eye here?
Yeah, I think it's just it kind of continues the story that we've been talking about here, where there's waning demand and probably some inflation concerns. Holders of these long duration treasuries are concerned about their real returns they're going to get being squeezed as we go into a period of lowering rates. You know, that tends to be inflationary. That squeezes that real return. They don't want to be holding these things. They're demanding higher yields. They're selling. And to cap those yields, you have the Treasury issuing more short-term bills, taking the proceeds from that sale, buying up the long duration bonds to try and keep those yields under control. It's you know, it's not nothing. It's interesting to see that.
I think that plays nicely into the Dalio comments. If we want to go there next, Brady.
Yeah, let's do it.
Okay.
So yeah, go ahead and tee it up, John, and then we can read. We've got a couple of choice quotes here.
For sure. So Ray Dalio, billionaire, investor, hedge fund manager, did an interview with the Financial Times. And I will preface it by saying this is stuff that Bitcoiners have been made aware of many, many times for quite a while now. But it is Ray Dalio. He has a big following, a huge reputation. So this kind of stuff is presumably going further than just, Bitcoin Twitter.
It makes news when he says stuff like this, for sure.
Yeah.
Yeah.
Exactly. So Jason just reminded me of it when you're saying, okay, there's a lot going on in the world, which signals that the natural demand for government fiat denominated debt is not as big as it once was. I think that statement is undeniable.
Right.
Whether it turns into an outright crisis and when that happens, what does the crisis look like? How much do central banks need to purchase to smooth over that crisis? These are all details that are certainly up for debate, but the backdrop is pretty undeniable. And I'll let you decide which of those quotes you want to highlight here, Brady.
Yeah, I mean, saying something similar to what we were just talking about here, said that, A weakened central bank pressed to keep rates low would undermine the confidence in the Fed defending the value of money and make holding dollar-denominated debt assets less attractive, which would weaken the monetary order as we know it. And then he goes on to say that the great excesses that are now projected as a result of the new budget, and there were already great excesses there, additional great excesses will likely cause a debt-induced heart attack in the relatively near future. He said, I'd say 3 years, give or take a year or two. So 1 to 5 years is the window he's looking at for the nothing stops this train thesis to really play out, which is basically fiscal dominance leads to failure of the government and loss of faith in the US dollar and US dollar debt instruments like treasuries. So here he is also, he said Washington was spending about $7 trillion a year while raising just $5 trillion in revenue, an imbalance that would force massive new debt issuance. And he said the demand for debt will unlikely keep up with the supply. The Fed would face a stark choice as the market began doubting the U.S. fiscal credibility. Dalio added, allow interest rates to go up and have a debt default crisis, or print money and buy the debt that others won't buy. Both paths would hurt the dollar. Hurt is a little bit of a weak word in that sentence, I think. Both paths would kill the dollar, would deal a mortal blow to the dollar, something like that, more along those lines. And this is, we know this is the fate of all fiat monies. So I think those who have been holding, global reserve currencies in the past as savings for a long time, 100 years, however long it lasted, several hundred years in many cases, probably very much underestimated how fast it can all unravel, because money is a system based on trust, right? You trust that the money is going to be relatively the same value or higher. That's why you want to hold on to it. If you lose that trust, then it's a very systemic failure, and it just cascades very quickly. So you don't need a whole lot at the top to really kind of start the forest fire. The thing with Bitcoin is you never have to trust that it won't be printed more, that it won't be debased, it won't be devalued that way. That's I think Satoshi's quote was, the system is full of breaches of that trust, I think is what Satoshi said. Yeah. So Bitcoin is a trustless system in the sense that you don't need to interact with a third party in order to use your money. But it is still money, which is a trust-based, in large part, in my opinion, kind of system, right? Because you trust that the money is stable, that it's strong, that's valuable. You need to assess the qualities of the money to be able to determine how much you should trust it. And the market does that. And the market's doing that all the time, constantly. And as we move forward, the bet that we're making here, and I think it's just becomes clearer and clearer and clearer every year that we're in this space, that we're probably right, that Bitcoin will become the most trusted money on the planet, for all of the reasons, all of its properties that we talk about all the time. So what we're seeing now is the loss of trust in the US dollar, and it's happening in real time. And Dalio says 1 to 5 years. That feels right. And it might sound to a lot of people like that's just crazy. You mean the dollar's going to fail in 1 to 5 years? Maybe not completely, right? But enough to the point where it's not going to be the dominant global reserve currency anymore. Maybe we're in an era where there's sort of a multipolar world in terms of reserve currencies for a while. But I do think that Bitcoin will end up, playing that role because it's just the best suited tool for that role.
I do think it's going to be interesting to watch Fed actions and behavior over the next several years, because I think they're, to the points Jason was raising, to the points that Dalio said in the FT article, the natural demand for treasuries is just not going to be there like it has been. And if that's the case, then the Fed is going to have to step in at some point with some sort of program. What I think is interesting is that historically, when they've stepped in, it's because there's a financial crisis happening, 2008, because COVID is happening. Oh my gosh, there's a pandemic. Everything got shut down. Guys, we have to buy $3 trillion of assets in 3 months. There's even the BTFP, the banking crisis in 2023, there's like always kind of good cover for them to do it. I mean, you know, people who believe in sound money never bought that cover, but like to the public, it was like kind of defensible. They could go out, they could hold a press conference and say, this is why we need to have this program. What I think is going to be interesting going forward is that I think they're going to have to step in without some sort of big like external shock. It's just going to be like, hey, we just need to grow the balance sheet because there's not enough demand for and they're not going to say it that way, right? But like, and I don't think it's going to be $1 trillion in a week like it was during COVID. But I think they're going to have to start some sort of program where they are buying, and it's going to be, you know, QE, but they're going to call it something else and swear that it's not QE. And even if the size isn't massive, I think that's coming at some point in the next 1 to 2 years. And probably the Bitcoin people will be sounding the alarm saying, hey, this is what's happening. It's here. I'm not saying Bitcoin's going to, you know, double on the back of that announcement, but that is going to be another brick in the wall of this trend of the Fed just has to intervene more as time goes on. Because again, that natural demand for government debt is just slowing over time.
There'll be some sort of Orwellian messaging of like, we have a new enemy and the war on debt is upon us. You know, it's like some ridiculous upside down world type stuff.
So much train not stopping. It really is like it's hard. It's almost hard to wrap your brain around a way out. I don't think there is a way out. And to your point, John, it's like what we're seeing now is almost just like a gradual acknowledgement that like, hey, this is slowly failing, and how do we put the best spin on it possible? The yields continue to rise and blow out because of waning demand. You get the debt growing faster. The debt grows faster. They need to step in with QE to lower those yields. Stepping in with QE is inflationary. Bondholders get concerned about real returns. They start offloading bonds again. The yields start coming back up. It's just like this ongoing cycle. And the longer you think about it, the more you get a headache. So buy Bitcoin. It's easier.
Don't make it hard on yourself. Just buy Bitcoin.
Have you seen the Neil Jacobs FOMO 21, one of his videos with the girls who are like saying, oh, I'm part of this inside trading group and they give me, you know, Fed liquidity signals and it's really helping my portfolio, something like that. And then the other person's like, did you know you can just buy Bitcoin?
Yeah, I've seen that one. It's so good. And it's so true. I mean, it just goes to it speaks to this over financialization of our money, of our economy now. It's like 30% of our economy or something is finance related industries, and it was 8% before 1971. So it's, you know, taken over like a cancer on our economy, pushed out all kinds of other real production stuff. By real, I mean like making things that people actually use physically from day to day to the rest of the world. And this was what we paid. This is the price that we have paid as Americans to have the global reserve currency. And how much has it benefited us as Americans, as individuals, right? Not so much. Certainly has benefited the Department of Defense and you know, other government agencies and government programs and corporations that are, you know, feeding off of the fiat money printer and getting free money effectively. They're at least a lot cheaper than any of us. So it was the global reserve currency, the dollar becoming the global reserve currency was great for people in power, for rich people, help keep them rich, make them even richer, for big companies, etc. Not such a great deal for us, and that doesn't get talked about enough, I don't think. So you know, Bitcoin is just as good for me as it is for Michael Saylor or for whoever, Bill Gates, Ray Dalio, etc., etc. It's the same. It's literally the same thing. We both have access to it at the same price, at the same place. We can store it in the same way. No one else can touch it. You know, we don't have to. It's just it's egalitarian money, and the dollar certainly is not that. So I don't know, John. What do you think about this? Like, where are we going? What do you think about his 1 to 5 year prediction, and what do you think he means? Like, this is kind of what I've been thinking about in the back of my head while we've been talking. Is what does he mean by, let's see, let me bring it up again.
I think it was at the bottom of the first one, the debt-induced heart attack.
Yeah. What does that mean? The debt-induced heart attack? Because that's a nice metaphor, but it's hard to precisely interpret what that might mean, right?
Agreed. It was not in the article. The article is presumably a summary of a longer conversation. So I'm not sure if the interviewer asked a follow-up there.
Yeah.
I would have liked to hear him describe exactly what that means, because it is easy to say, hey, something's going to happen to the dollar. People have been saying it for a long time. I'm generally in the camp that this, like, I always stress that hyperinflation is, or a failing currency is like Venezuela type situation. It's like people are literally fleeing the currency. It's a currency failure, and it takes so much for that to happen. I don't forecast anything like that to happen for the dollar, because has generally been one of the better performing currencies. The U.S. still is it is the biggest economy, one of the best places for rule of law with all its flaws. It still is that. And there's so much U.S. dollar debt out there, which does reflect a demand for people to get their hands on dollars at some point in time and pay back that debt. Unit of account, network effects, like all these things are massive. So I'm not forecasting any sort of currency, like true currency crisis anytime soon for the dollar. If I'm putting myself in Dalio's shoes, okay, a debt-induced heart attack, maybe he's talking a little more about what I was describing, where it's like the Fed has to come out with some sort of program, even though there's no external shock. They just have to be like, hey, there were some really bad Treasury auctions because nobody wants to be a natural buyer of the debt. So now the Fed has to step in. That to me would be, it would be some sort of crisis. It wouldn't be a currency crisis. And it would be bad, no doubt, but the dollar would still exist. So yeah, it would be interesting if we'll try to get Ray on the show next week to answer that question.
Yeah, we're having drinks tonight, so I'll see him and see what he thinks. All right, let's take a look at. We've been looking at the heat map lately. August is over. We made it through. How much did we go down in August this year, guys? Does it say here?
6.5%.
Is that updated? Okay, let me get rid of this thing so I can see it better. Yeah, 2025. All right, so right on pace, 4 years in a row down. We've had up Septembers, 3 in a row after a run of like 6 off months. So with these rate cuts coming in and then heading into 2 historically great months for Bitcoin, especially October, but also November. What do we think, guys? Is this going to be an up month? Are we going to hit all new time highs the next 2 months?
Yep.
Okay, good.
There you
go. Yeah, I think so too. Let's talk about the BTC Treasury companies. Nice little big number, round number passed here. So Bitcoin held by publicly traded companies just passed 1 million Bitcoin. Strategy has 60% of that. But it is a growing number of companies, and also a significant amount of Bitcoin held by the rest of these public companies.
Crazy.
It's a milestone for sure.
Yeah. So where do you think we are? I mean, what's going to happen with Bitcoin Treasury companies, guys? Like it's been a tough month or two or whatever for Treasury companies. Been on a tough run. Is this a flash in the pan? Is this a legitimate strategy? Is there only room for one? What do you guys think? I mean, it's obviously it's still early in this whole thing, and we're just really getting started with adding new companies following the strategy, the MicroStrategy strategy, the strategy, and that's really just starting. So I mean, we have to give some room to breathe to really see what happens. But there's quite a bit of hype for a few months there, and some of these companies are now coming out after raising a bunch of money to buy the Bitcoin. Their pipes are unlocking. Their private investment and public entity fundraising mechanisms are unlocking, meaning those investors have access to the shares. That dynamic's obviously playing a big role in market sentiment right now, I think. But what do we think? The last month or so changed anybody's mind about the potential for and the legitimacy of a Bitcoin Treasury strategy?
I think there's a lot to unpack there. What I wanted to highlight is I actually take this as a good thing that this Bitcoin Treasury company strategy didn't kick off until later. Like, there's been a lot of announcements and MicroStrategy's been doing their thing, and they're basically just 5% of the total Bitcoin supply. Um, I think it's inevitable. I think corporations are going to do it. You can't stop it. It would still, with that said, it would concern me if it was like, hey, 80% of all the Bitcoin in supply is in corporate hands. I don't think that would be a good outcome, but I think the positive take is that I don't think it's ever going to get there because Bitcoin is too big.
Yep.
So I think that's kind of a good thing. You could make similar comments about the ETFs as well, and I have made those comments. I think it's a good thing that the ETFs didn't get approved back in 2013 when the Winklevoss twins first submitted a request for an ETF.
Right.
If they got approved like that year, which maybe that never could have happened from a regulatory perspective, but let's just say they did.
Yeah.
I think you might see like 75% of all Bitcoin in an ETF because back in 2013, people just barely wanted to deal with Coinbase. You had Mt. Gox and all this stuff. So
interesting.
Yeah, I generally take it as a good thing that these more institutional avenues to acquire Bitcoin didn't come around until later. So I just view it as it's inevitable. It's going to happen. Doesn't mean all are going to be successful. It is going to keep going. It's going to fall in and out of favor in terms of like hype. And I think you're obviously have seen, if you follow this space, you've seen that in the last 9 or 12 months. The MNAVs are like a pretty good indicator of where that hype is.
Yep.
They're compressing. I don't want to say collapsing. Maybe some are collapsing, but they're definitely compressing right now. And but I like most markets, I don't think it's just like, oh, it went up and it went down and that's it.
It's over.
There's going to be flush outs, and the people who didn't have conviction or didn't have a good management team will go away and do something else. The other people will stay. So I still think it is a trend that's here for the long term.
I would also add that into the future, I see just public companies in general starting to hold Bitcoin on their balance sheet without executing this kind of leveraged, strategy that MicroStrategy has been doing, right? So you'll have kind of two different
good
camps.
example, for instance, and Tesla has held their Bitcoin for quite some time. They're not a leveraged Bitcoin equity or anything. Yes, I agree with you.
Yeah, it'll just be a realization that, hey, this is something that's a reliable store of value. We should have some allocation to it. That doesn't mean that we're hitting the ATM to try to raise more capital, to constantly cycle and increase more Bitcoin stacking activity, right? But just holding it.
And just to be clear, like a lot of companies on this list that we just looked at are not running a leveraged Bitcoin equity program. Where are we? This one? Yeah. So this list of the top 100 or whatever it is, there are a lot of these that are just holding Bitcoin. And they're not all companies who are running a leveraged Bitcoin equity strategy, which is a different thing, like what Jason is describing. So I just want to make it clear, like that chart shows any public company holding Bitcoin for any reason.
Yeah. Yeah. And I think that continues to grow. And I think that's on the whole a good thing.
And as Bitcoin bores us to death on its whip to $1 million per Bitcoin, like it's kind of nice to have some volatility over here if you want it, right? I've heard it said a couple of times. People miss those dopamine hits, right, of the volatility of Bitcoin. So there's a place for them. They're going to be around for a long time, and I just wonder what it looks like, a decade from now. It could be very interesting, and at some point, I wonder if people demand to show like proof of reserves for everything, because there's so many more companies going to try to do this. And they're going to have to say, hey, here's my wallet address. Here's what I actually hold to prove it,
Yep. Yep. I agree.
Yeah.
I don't think this leveraged Bitcoin equity strategy is like a flash in the pan going anywhere. And Saylor's been running it for almost 5 years, it seems like now, right? 2020. And he's shown to be successful in many different market environments, many different sentiment levels. And I do think other companies can execute it legitimately, and they will compete on management excellence. Can the team actually make it happen and do it in a really strategic and smart way and react to the market and do the right things at the right time, et cetera, to maximize Bitcoin per share? It's a legitimate strategy, and it'll continue to be around. It's just going to go through highs and lows, and it was hyped up quite a bit for the first part of the summer and stuff. So yeah, I think people, like John said too, you'll have people who understand the bet, and they'll have their conviction and they're holding at really nice entry levels, and they can just kind of put it aside. It's like developing conviction in any investment, including Bitcoin. And I think, I think it's going to be around, and not, it's not one. The size of the market for this strategy and for this, service basically is not one, in my opinion. So there will be other companies that are servicing the debt markets with instruments and tools that can beat fiat denominated debt instruments and gets them exposure to Bitcoin in ways they can't. As long as that arbitrage is there, this is going to happen, and it's going to be a fruitful strategy. But you gotta do it right.
Well, let's not forget, even the one company that you're referring to, Brady, obviously MicroStrategy, which has been successful. I think no one can deny that at this point. The Wall Street Journal, I just pulled it up so I can get the exact title right. August 3rd, 2022, they wrote an article that said Michael Saylor bet billions on Bitcoin and lost.
Yeah.
So there's a lot of people that will wave their credentials around in the media, or even just random people on Twitter, who will gladly write obituaries of people who the stock price is slumping or whatever. And those are usually not good people to listen to if you're in the process of executing a long-term thesis.
Correct. If there's something gets super hyped, there's gonna be a letdown effect. It happens with everything. It's like just a human nature thing. And there's gonna be a letdown effect. And the way that you really win in markets like this is don't let that affect you. Try not to let the animal spirits guide you. So if you read about it and you think about it and you decide this is a good idea and you allocate some money to it, then probably just listen to your thinking self, and try to avoid all of the second guessing. Otherwise, you'll just keep going back and forth, and you'll have a lot less money every time you do that.
So should I not be making all of my decisions based solely off of the irresponsibly long MSTR group? Is that something I should...
Well, they're pretty based actually, so it's okay. You'll be all right. Let's see with some quick hits there, unless anybody's got something to wrap up on that topic or any other topic.
Since we're talking treasuries, I feel like we got to talk about what may happen after the market closed today with MicroStrategy.
Right. Yeah.
And maybe there's a little hint with involving a fresh new pair of sneakers. We are not endorsing this theory. We are simply sharing that this theory is out there on the interwebs. As you can see here for our people who are looking at the image, someone posted that apparently Tesla, 2 weeks before they got included in the S&P 500, they launched a $250 tequila that you could buy, like Tesla tequila or something. I don't remember that at the time, but I was never a deep Tesla follower. MicroStrategy, I think this is yesterday. So they released a pair of Nike Dunks shoes, and they're also $250. So you probably don't have to be a wizard to connect the dots there, but people on the internet are speculating that means they're going to get included today. The background for anyone who hasn't been following, they check all the boxes, like the objective boxes to be included, but the S&P 500 has some sort of committee that has to then decide on top of the criteria if they get in. I have no edge here personally. I don't really know those. I don't even know the names of those people on the committee. I don't know how they decide. So I'm not going to pretend like I know, but we're going to get news in one direction or the other at the market after the close today.
I did my part and bought the dunks.
What'd you say, Jason?
I did my part and bought the dunks.
Just one pair?
We'll get it over the line. Yeah. Several pairs.
That's awesome.
John, if they don't get in, can they sue somebody? Is there some sort of, hey, that's not fair, or what can they do?
We did the last check mark is to list random merch on your website for $250.
My guess is that's not possible. I would think the S&P 500 committee has it clearly enough laid out that it's just like, hey, the last decision point is up to us. And
we got a subjective filter for whatever may come.
Basically. It's a filter. You trying to start a debate here, Brady? Filters work.
Ooh.
I do run knots, by the way. Just to be clear, you can send me your hateful DMs now. All right, Arc Labs. Quick hit here. Arc Labs is working on another layer 2 solution that works in cooperation with Lightning called Arc, which is very exciting, and kind of been loosely monitoring this for a while now, at least a year. It's been working on this and making great progress. There's the legend himself, Mr. Cooks. He also, I think, was one of the lead developers for BTC Pay Server and some other projects as well. Anyway, here he is doing this really cool project in Riga where they used Arc for the first time in production, basically, in a production environment. And we will throw that the link there. You can find this. Just go to Arc Labs on Twitter if you want to read the thread about what they did. But it's pretty cool stuff. Big success. Basically, Arc can make Lightning more effective and better in many ways. And it's just another example of innovation on top of Bitcoin. And shout out to all the coders and designers, developers out there who work on making our money better. And how cool is it to have programmable money that can be made better? This is the way, right?
This is the way.
I think this is a good point to highlight. Lightning and Arc and these types of things. It's obviously more aimed at making Bitcoin a better medium of exchange, or, payments and things like that. Most, I think, us on this call, generally people at Swan, of course, everyone's entitled to their own view. We're of the belief that Bitcoin is in more of the store of value phase. We think that's logical. We think that is just how it's going to go. Store of value is a bigger problem for people. Payments is less of a problem for people. So we've gone through this many times. But with all that said, we still think it's awesome that stuff like this is being built. We think it's awesome that Lightning exists, that Arc is being built, that people have the option to use it as a medium of exchange. So these two things are not mutually exclusive. We want to see more of it, but we often are explaining why it's unlikely that a year from now, all the merchants in the world will be accepting Bitcoin and Lightning payments, but it's great to see that this kind of stuff is still happening.
Oh yeah. It's fantastic to see. I love seeing it. I have massive respect for all of those guys who are the builders in the space.
Super important work. And to John's point, I'll keep this short because we have discussed it a lot, but I don't think we really get heavy into the medium of exchange phase until Bitcoin gets extremely boring. Nobody wants to spend their Bitcoin right now knowing that it might be worth $3 million per coin in 10 years, which is what Bitwise's recent report projected. So yeah, it's a phase transition, right? Like you can't force the medium of exchange phase to happen too quickly. It needs to prove itself out as a reliable store of value. It needs to become less volatile. There needs to be less opportunity cost associated with spending your Bitcoin. And we're not there yet. So
I totally agree with all of that. I think there is something to be said that people can do the whole like spend and replace thing. You can, use a little bit of your Bitcoin at some merchant to signal to them, hey, I think it's cool that you accept Bitcoin. I'll buy a beer for whatever, or buy a shirt from you. So, you can still do that. And then make sure on Monday to smash by, $30 for the shirt you bought. So I think that will kind of gradually happen. But if you're talking like widespread medium of exchange, then I think you're spot on, Jason. It's just unlikely to happen soon.
Yeah.
Absolutely. John, is Steak and Shake seed oil free? Do we know?
Dude, I literally asked ChatGPT. I was like, how many miles away from New York is the nearest Steak and Shake? And it's not close. It would be a long drive for me.
They're tallow, I think. They're all beef tallow.
We'll make the drive then. We'll do it.
Yeah. We'll road trip it, boys.
Maybe we can all go to see Killing Satoshi too. New movie coming out, everybody, next year. Pete Davidson and Casey Affleck teaming up with Doug Liman, the director of the Bourne Identity, or the Bourne series, Jason Bourne series. A new Bitcoin thriller film called Killing Satoshi, which is Ryan Kavanaugh is also on the team. He's financed projects like The Social Network and Fast and the Furious. So there's some big names here. It should be a pretty big box office thing coming next year. Kavanaugh said, "This is not just a movie about Bitcoin and its elusive and mysterious origins, but really about what it stands for. Killing Satoshi will explore the theory that powerful forces, governments, Wall Street, Silicon Valley, have their own reasons for ensuring Satoshi's identity never surfaces, and why Satoshi worked to like diminish those forces." Sorry, I got cut off there. I can't see the rest of it, but that's effectively what it's trying to say.
That
sounds
I didn't
interesting.
see
I'm
that
curious
right up,
about it.
Brady.
Could be terrible. What's that?
I didn't see. I'm glad you read that. I didn't even see. I just saw the headline. But now what you just said really made me think that about the powerful forces.
Okay, here it loaded back up. As Lyman puts it, the film will follow unlikely anti-heroes taking on the most powerful people on the planet in an epic battle that strikes at the core of what is money and who controls it. Sounds like it's actually about Bitcoin and the ideas behind Bitcoin, which is pretty cool. The untouched fortune, Nakamoto's fortune, has been one of the main reasons behind the long-running quest to find out who created Bitcoin. And it just goes. This is a great article. It's in Yahoo Finance. You can just, if you really want to read it, Google "Killing Satoshi" in Yahoo Finance, and it'll pop up.
I'm always so skeptical about these things. I don't know what kind of angle they're going to put in there. Is this good for Bitcoin?
I'm definitely skeptical, but these quotes from the director are promising. Sounds like he's like wants to tell the story of Bitcoin and like why it exists, which is, unfair centralization of power, basically. So
there'll be no sequel though. So what's the point, right? The Fast and Furious number 12 or 14, whatever we're on now, like we're not gonna make any money on it.
I don't know. Killing Satoshi 10 could be happening right around the time Bitcoin hits $10 million.
I don't know, guys. There's a good outcome here. I think they think there's sequels. They're going to do the Bitcoin movie. It's going to be phenomenal. Then they're going to do the Ethereum movie, and like 12 people are going to watch it, and they're going to be like, "What happened? We thought everyone loves this stuff." And then that's how they're going to learn it's Bitcoin and everything else.
12.
I'll put the link in the chat
bullish.
if y'all want to read it. Good stuff. All right, we'll keep tabs on Killing Satoshi, and maybe we'll do an update here every once in a while and a quick hit.
Can I ask one more question, Brady? This comment now has me going. Killing Satoshi will this part of the article will explore the theory that powerful forces, governments, Wall Street, Silicon Valley have their own reasons for ensuring Satoshi's identity never surfaces.
Yeah,
that's
interesting, right?
That to me makes it sound like
they're gonna make it an NSA
created Satoshi.
Like
yeah. So we'll see. It might be a mixed bag.
Yeah. Oh, I'm sure it will be. I mean, if Bitcoiners were given $200 million to make a movie, it would probably be quite different. A movie about Bitcoin. It'd be fun to come up with some ideas though. Like, it's not a documentary. It's got to be a story. Maybe we should work on this. We should workshop this sometime, John.
I feel like we should get a whale to fund that. If one of these whales who has $10 billion in Bitcoin, spend 200 million funding a movie. That's nothing.
We keep Pete Davidson though. Let's keep Pete.
You like Pete?
Yeah, I like Pete. He's a very he's a weird guy. He's an interesting guy.
He seems real. He seems real. Like he is who he is. There's no. All right, guys. We'll call it for this week then. We'll see you all next week. Really appreciate your time here. Check out BTC in DC, which is at btcindc.com. We have just in about a month at the Kennedy Center in Washington, D.C. Awesome conference, amazing speaker lineup. Go to btcindc.com to check that out. Use code SWAN for 10% off. Check out Swan Private at swan.com/private. We build strong relationships with our clients, trying to help them invest in a Bitcoin world. We also provide IRAs, Bitcoin IRA services, and we also provide self-custody, collaborative self-custody through Swan Vault. Find us at swan.com. We would love to meet you. Take care, everyone. Next Friday.